Hey, good morning. This is Chris with Suarez Home and Finance. It is our morning coffee with Chris. And so I hope you're having a good morning. Here's my coffee. Starting out the morning with some sort of education. So this morning I'm going to be talking about being self-employed. So Andy and I have been self-employed for over 25 years. There is growing pains, there's learning, there's mistakes, there's things that you should do, there's things that you shouldn't do, there's things that you did wrong, all of that kind of stuff. So, and then with me doing financing is I am always looking at people's tax returns and so on and so forth. And so many people get into business and jump in, which we did too. Jump in, but don't do some of the things that you really should do. So I am not an accountant. I am not a financial advisor. I am. I have that certificate on my wall or whatever that's printed by the printer that says I'm a financial counselor. I'm just kidding. But I always recommend getting with an accountant, a very good either accountant or CPA. I have changed quite a few times because I just have a hard time finding somebody that looks at things and finds the best credits and so on and so forth or whatever for what I do. And so we're going to have actually an accountant on here soon and talking about some things too. So stay tuned for that. So what I'm going to talk about today is just different things as far as being self-employed and some of the things to look at, to pay attention to make note of, and to check into. So I'm going to share a presentation, a slide that, is different things and kind of walk you through some of the ins and outs and explain as far as, in my view, things that you need to look at. So let me see here. So I'm going to add my slide here. So self-employed. I'm going to give you tips and words of wisdom. So that's what I'm going to give you today. So bank account. Do you have a separate bank account for your business? So a lot of times, depending on your business structure. So again, I'm telling you what I know and what I have been told throughout the years and so on and so forth. Again, not licensed, and I'm not definitely, IRS by all means. But like, for instance, a bank account. So you really should have a separate bank account for your business to pay your business bills, expenses, gas that, if you need to, if you're driving, if that's pertaining to what you do, so on and so forth, so that you have it all in one place. And so whenever you intermingle your personal account with your business account, then you're kind of muddying the waters. So whenever you are self-employed, there's something that I've always been told, and I'm very cautious, piercing the corporate veil. So from my understanding, that if somebody were to take you to court, if you intermingle those personal and business funds, then you can, then they can take you to court, and you have pierced the corporate veil because you have mingled those things. And so now where your homestead would have been protected, now it's not. So those are just my layman terms, but keeping a business bank account is going to help you as far as making sure that how you're doing your books and where all of your books are, and categorizing all your things. This is how much I'm spending on gas. This is how much I'm spending on, marketing, advertising. This is how much I'm spending on payroll. Whatever the case is, insurance, so on and so forth. So it's very important to do that because you need to allocate those things. Also, whenever you're doing your tax returns, if you do that too, then your accountant is going to be able to, look at your accounts better, make sure that you've got everything that you can, all of the above. So that is as far as bank accounts. For instance, for financing, whenever I am doing a loan for somebody that is self-employed, we've had it to where that they have only using their personal account and do not have a business account. So therefore, whenever you have deposits that are large, whenever you're doing financing, you may be asked to source those deposits. And that is the Patriot Act, that's 9/11, so on and so forth, that the deposits have to be sourced. And so when you have those, when you're trying to do financing, when you have those, you may have to source those deposits, even though they're into your personal account. But because you're mingling those, that's where you're going to have to show where those deposits came from. Not in every case, depends on what financing you're doing, so on and so forth. But for home financing, you may have to do that. If you're going to buy a car or something, you may not have to. But again, it's better to do a business bank account, in my opinion, to keep all of that separate for bookkeeping for all purposes. Next we have, as far as an accountant, do you have an accountant or CPA for your business? A lot of people, I see a lot of tax returns that they don't have an accountant and they do their books themselves. Well, if you're doing your books yourself, I used to as well, and we're all smart people. But we miss things. And so there's whether it's a gray area, whether it is something that is allowed to be deducted or whatever. For instance, I think there's a credit for hiring people. And so that's something that, if you're not used to doing those things, then you could be losing out that as a business and not having that credit. So there's several different things or whatever. And that is where you really need to find a good accountant that is going to look at all of those different things for you so that your books are right, so that you are getting the best benefit, because being self-employed is a catch-22. So yes, it's great that you can write everything off and you're making your money and so on and so forth. The downside of that is that you do write everything off. So whenever you're going to do financing, your bottom line might not show as much. Great, because you may not be paying as much taxes, but on the flip side is you may not be showing as much income. So that is the problem that you have with self-employed whenever you're going to buy a house, is that, what is that number? But that's also where an accountant comes in, that if you bought a new car, for instance, we bought a car a couple of years ago. And so if I need to show more income on my taxes because I'm doing something, then the accountant that I was talking to asked me, okay, so do we want to spread the car depreciation, which I know what I'm saying, but I don't know what I'm saying. So in other words, do I want to spread the car depreciation over like 7 years or however 5 years, whatever it was, or do I want to take the depreciation all in one lump sum? So on financing for a house, that depreciation can be added back in. So do you have a lump sum because you need it now, or do you spread it over however many years? In my case, it was more beneficial to spread it out because I was going to get $7,000 more in credits if I spread it out. I didn't need it today as a lump sum, so we spread it out. So I would have never known that. If I was doing my own taxes, would have no idea what I'm even talking about. Same thing that if you're doing rental properties, you have your depreciation. Well, whenever you're doing financing, that number can be added back in. I see a lot of taxes that even accountants do. Somebody that is supposed to be doing correctly, for some reason, either they don't ask, or I don't know why. I cannot answer for anybody else, but I see a lot of rental tax returns, people that have rental properties, that they are not taking taxes and insurance, property taxes and insurance, and not putting it on the tax return. That's a tax benefit that you have whenever you have rental properties and it's being left off. And so in my eyes, again, not the licensed person, but in my eyes, number one, you're paying more taxes because you're not having that deduction. But number two is that whenever you're going to do home financing, that number can be added back in, which increases your income. So again, very important that you have an accountant to do your books that knows what they're doing and ask the right questions, so on and so forth. So interview your, accountant. I was talking to one, and, my question is what are the questions that you're going to ask me, right off the bat? And I have the benefit of being, of whenever I started working, however many 50,000 years ago, I worked for a company that they had several different businesses. And I learned how they did things and how they categorize things and put things in order to make the best benefit, because they were all about keeping all the money that they could possibly keep. Absolutely. Who doesn't want that? And so that is where I've learned to expense different things and to do different things in different ways so that you have that, so that you're getting your best benefit. So your accountant, you need to interview them and make sure that they are going to do the best for you and what all you have going on, and ask all the questions, to make sure that you have everything, every benefit that you can that's legally allowed to. So that's where I'm at. That's my opinion. So the next one is, the next category is your receipts. Oh my gosh, my husband can't stand all of this because we have 3 different companies now. We've had different companies throughout the years, and receipts, they drive us crazy. And so I keep a receipt for everything. From my understanding is that if IRS comes in and audits you, if you don't have the receipt, then you can't take that off. And so then you don't have as many deductions because you don't have the receipt. I could be wrong. Things have may have changed. But I still hold to it. And I have my bank statement. I put all my receipts for that month for that company in that bank statement so that I have it. If anything ever happens, I've got it. Is it tedious and is it a big process? It depends on how much business you do and what all you use, what all you're doing. It just depends on you. So what I've suggested to clients is, just take an envelope and, whether you stick it in the car, whatever you do, just stick your receipts in there. And then at the end of the month, then put it in with your bank statement. I'm preaching to the choir because I should do that. I don't do that because I get so inundated and caught up in everything else or whatever. And so I have a drawer of receipts that need to be sorted through. It's crazy, but I do. But again, that is a question for an accountant. Do you need to keep all of your receipts? And again, I know that like QuickBooks has, the thing to where you can do the receipts and take a picture and all that kind of stuff. I don't do any of that. I'm just not mentally there. I like to see tangible things. And so I separate it. And again, I do so many different things to where I have just receipts that I could probably burn a forest or something. I don't know. But anyway, so receipts I think are very important. And again, check with your accountant, because I know a lot of people don't balance a check register anymore either. So that's where that kind of comes in. So that is my whatever on receipts. Next is your debt. So how do you pay your debt each month? So let's say you have a car and you have to drive your car for business. And so you're a plumber and you're driving to job sites. And like I used to have a company that we used to have in construction. So we were driving all the time to job sites, driving everywhere from, everywhere from one county to another, probably about 10 different counties or whatever, constantly. So your car is being used for business. How do you pay that? And so again, if you have a business account and you pay for that car out of the business account, whenever you're doing financing, you can take that off of your debt. So for instance, if your car is $500 a month and you pay for it out of your business account, and I can see that for 12 months, then you can take that off of your debt so that you may qualify for a house. Same thing goes with a car. Same thing goes, with different kind of financing. So again, it's important to pay your business stuff out of a business account, again, in my opinion. But it's important to do that and keep things separated. Same thing with credit cards. If you have a credit card that you use for gas, pay it out of that business account so that you're keeping that separate. And then that way, whenever you go to do your taxes, you're able to, show that quick and easy. It's able to be written off, so on and so forth. And so, again, it's your bank statements are there. Let's say, for instance, if you, you have, you don't do payroll on yourself with taxes and everything else or whatever, you can still take money from that business account and put it into your personal. Your accountant would normally do that as what's called an owner's draw. And then they, that's whenever they're doing your taxes and you may pay taxes on it, that's where you would pay your FICA and your Social Security, all of your other crap or whatever through that. But at least if you take the money from your business account, it's considered like an owner's draw. Sometimes I do it like as a loan or whatever that I've done throughout the years. And then you can pay the business back or the business owes you money or whatever. But at least, again, you're putting everything through the business so that it's through the business. So that's what I suggest on that. So anything that is debt related or anything that is business related, to pay through the business. I have to have internet. I have to have cell phone. I have to have, all of these different things for my business. And so the business pays for those things. So, think about what you do that is business related and get with your accountant. And can you pay those out of the business to have a deduction? Again, who wants to pay more taxes than what you should pay, or than what, what you should pay, what you want to pay. Nobody wants to pay them, but if you can get the deductions, then absolutely. Next is your car expenses. So this is kind of a thing that I've gone back and forth with. From my understanding is for the first year, you have to choose either mileage or hard cost, one or the other. And then after that, I believe that you can change. Again, a question for an accountant. But I think that you can change after that. So whenever you're doing that, when you're doing mileage versus hard cost, your mileage is, your miles is your miles. And so you have to keep track of those miles. Is it tedious? Yes. I am not a fan of that. I used to drive I would say that we used to drive probably over 60,000 plus miles a year, easy, if not more. Now with the business that I'm in, my miles are drastically reduced. So I pay my vehicle out of my business account. And so my expenses are there. And so I use the hard cost because if I have car insurance, gas, car payments, so on and so forth, that would give me more of a benefit than paying for or than doing miles, the mile calculation. And so again, it just depends on what your type of business, weigh it out, which one makes more sense for you to do, because again, it can make a big deal. If you do miles, and that is on your tax return, then that is something that whenever you're buying a home, it can be added back in. So for instance, if you drove 5,000 miles, the calculation for me may be 5,000, let's say 5,000 at 25 cents. That's not the exact number or whatever, but that's $1,250 that I can add back into income for a self-employed client. But again, that's where I can add that income. But also if you are doing, if your business is paying for out of the bank account, is paying for the car and so on and so forth, I can take that off of your debt. So again, being self-employed, make sure you're using all the benefits that you can use in order to help you on all sides. Again, it's a catch-22, but you want to get the best benefit that you can. Next is self-employed, or what an SCorp versus an LLC versus a C-Corp. I have always done an SCorp. That's what I've always been taught. That's what I've always done. I'm not sure of the difference between a SCorp and an LLC. Again, ask your accountant. I know a lot of people do an LLC. An SCorp, from my understanding, is that if something happens, they cannot come and take my home. But again, that's where, you can't muddy the waters and cross mingle personal with business to pierce the corporate veil. That's what I understand. A C Corp, I've never done that, because what I have been told on that is that you're basically paying taxes twice. You're paying taxes for your company, but then you're also paying taxes on your personal. So on an S Corp, your bottom line, your net profit or loss comes over to your personal return. And so that's where you pay the taxes on that. So your business doesn't pay taxes on an S Corp. It goes over to your personal return with what's called a K1, and then you pay taxes on that. So check with your accountant and see which way is going to be best for you. I've just always done an SCorp. It has just been my rule of thumb. Even, doesn't matter how minor the business or whatever. It's like, because you have to register with the state of Florida with SunBiz. It's like myflorida.com or whatever it is, but you have to do that. And so it's like $150 a year to renew, to do your annual certification. So at least I know the structure of my company and I'm consistent with it. And so that's why I do it. So again, it's just going to depend on, what is the best benefit for you? What is your type of business? What is the benefits? What are the pros and cons? So on and so forth. So again, get with your accountant on that to find out. But it is important to know the differences of those. You're self-employed. You need to know the ins and outs and what's going to, what's going to keep you afloat and what could get you in trouble. The next thing is SCOR. So my sister and I, years ago, whenever we started this, and actually, I think my best friend and I did it too, whenever we started a business back in like 96. SCOR is Service Corps of Retired Executives. So I have leaned on this, and this is a great avenue. Even if you've been self-employed for 20 years, whatever, it is a great avenue and great information to look at, to tell you. They provide you with a tax calendar. They provide you, with help if you've got questions, structuring your business. And they have, I think each county has one. And so you just have to look it up and see, where it's at in your county. I want to say that some of the classes or whatever that they were doing were probably on Zoom. I don't know what they're doing now, but definitely it is a great resource for being self-employed. Not only as far as how to structure your business, but tax calendars, doing everything that I'm telling you here is a lot of that information they're giving you. And like I said, there's classes. I even went to a class, probably about a couple of years ago, and it was talking about doing how to get a loan for a business, and what you need to have. Do you have a business plan? Do you have this? So on and so forth. So again, it's definitely information. It's an avenue to help you, even if you're just reading, online or whatever. But it's definitely something to help you and to continue to grow your business. So in all of this is be educated and keep growing. So, educate yourself on being self-employed. Make sure that you are doing what you need to do legally. Make sure that you're doing what you need to do in order to get the best benefit for you. There is tax returns. There is your bank statements. There's paying yourself. There's keeping your records. So I use QuickBooks. I've used QuickBooks for, since day one of me being self-employed. And then I used Intuit before that for my personal and stuff like that. I keep my check registers on there. I don't keep a hard copy, but I do make sure that I balance to the penny when I'm reconciling, because I need to have that for my accountant. It's so easy just to, send my books to the accountant and then everything is already categorized. When you do your books and you do your check registers and stuff, you've got, you allocate towards gas. It's an auto expense gas, auto expense insurance, auto expense maintenance, whatever it is, categorize it, accordingly, so that your accountant can find your things easy, so that you can find your stuff easy. And again, so that you keep any of the government off your back, because you're doing things correctly and you're keeping track of things correctly. So, as far as paychecks, if you write yourself paychecks, if you write yourself paychecks and you take taxes out, okay, great. If you don't and you do owner's draws, that's where your accountant should be, doing it on your tax return, so that you are covered with your Social Security and all of that kind of stuff. Again, bank statements, make sure that you're keeping your bank statements, make sure that you're, putting your receipts into those bank statements each month, so that you're keeping them categorized. If you've got marketing, make sure that whenever you're doing marketing, for my case, I have to have my license number on everything, something that I learned from SCOR years and years ago is that, and I see it all the time not happening, if you're doing an invoice for a job, or doing a quote for a job, from what I know, I'm not licensed for that, but from what I know, you have to have your license on those documents. So whenever you're giving a quote for somebody, you are supposed to have your license on that. I know for my husband as a home inspector, he has to have his license on everything. For me as a mortgage broker and loan originator, I have to have my company and my individual license on everything, so they know where to go back to in case of anything or whatever. I have to show that I am legally licensed. Your contact information on there, your address. So check on all of those things and see what you are required to have on those quotes and on those invoices, again, so that you don't get yourself in trouble. You want to have that on your, social media, your websites, your everything else anyway, so you don't get in trouble, but also people know that you are licensed and you are legitimate. Same thing if you're bonded, you have that. Make sure that it's on there. You are licensed and bonded. If I'm going to look at a service, I'm going to look at those people before I'm going to look at somebody else, because I want to make sure that I am protected and I have an avenue to go back for, God forbid something happen. So that's, again, those are just things that I've learned throughout the years. Again, SCorp and SBA has tons of information. SCorp, especially on self-employed, how to start a business, what you need to do, all of that kind of stuff. And again, even if you're seasoned and you've been doing it for so many years, I still even go back and look and see, hey, is there, a tidbit that I can get, to better myself in my companies. So hope you learned a lot today. Hope I helped you. Hopefully I put some questions into your head as well, so that you are finding out what you need to do a little bit better for your business, and to make sure that you are, you're getting everything that you can for your business, making the most money that you can, and making sure that the government is not coming after you. So hope you have a great Monday, and we will see you next week. We've got some professionals coming up. I know we've got an accountant coming up, and I know we've got a couple of others. So watch for the next couple of classes. And again, everything is on social media. If this is on YouTube, or if you're wherever you're watching this, please give us a like. I just realized that I never say that. So please give us a like on this, so we know you got good information. Please comment if you've got any questions or something that I can help you with, or something that your just thoughts or additional information would be great. We love the comments. So hope you're having a great day, and talk to you later. Okay, bye.